Hey YouTube, my name is Michael. In my last video, I kind of went over why dividend stocks work for me, but I've also started to diversify my portfolio a little bit. So I'm going to get into how much money I'm putting in per week, what those percentage allocations are, because I'm using quite a few brokerages to kind of split my money into several different pots, if you will. So if you're anxious to hear how my money is divided up, hang tight, we'll get into this video. Okay guys, so since I've been doing these videos, I've gotten quite a few questions from like my friends and family asking me, why are you doing these dividend stocks? And don't you think you're missing the boat on Tesla and Apple and all these other stocks that everybody's kind of moving on? Of course, the GameStop stock, everybody's, it's kind of gotten the public interest a little more heightened into this. So I've actually had people come to me saying, why are you doing dividend stocks and why not anything else? And my response to that is I am doing other things. My entire investment portfolio is not just dividend stocks. They are the ones that I'm most interested in. They're the ones I think are the safest investment and the ones that I think will help me retire a little bit earlier. But I do have more money allocated out. Again, it's not a ton of money. I don't make, I'm not a millionaire. I'm definitely not rich by any means, but I am trying to set aside a small portion of my excess cash and invest it in differing options. So we're going to go through each of these brokerages that I'm going to talk about. We're going to talk about Webull, M1 Finance, Coinbase, as well as my Robinhood portfolio, which is my main dividend portfolio, and that's actually getting transferred as we speak over to Fidelity. So as always, go ahead and click the links for those down below. You get free money, you get free stocks, kind of help you start on your financial journey. And if you like the content and you want to see more of it and you want to follow along with my journey, go ahead and click that like and subscribe button down below. So if you're new to my channel, I started my Robinhood portfolio back in April or May of 2020. Ever since then, I was putting in $50 every single week trying to grow my dividend stock portfolio, which I'm hoping will create this big snowball for me and help me retire early down the road. Ever since then, I've kind of paid off some bills, and as I'm paying those bills off, I'm allocating that money into my dividend portfolio. So right now, that what was going into my Robinhood portfolio was $55 every single week, and I'm going to continue that when that transfers over to Fidelity. That's going to be the main bulk of my money that I'm going to be investing every single month. Now, a few months after that, I opened up an M1 Finance account. What I wanted to use the M1 Finance account for, and I opened this back in August of 2020, so about 3 or 4 months after my initial start with Robinhood. What I was really looking for was getting some exposure to some of these growth stocks that everybody's talking about. Of course, with the dividend stock, those are all great, but you're not getting those huge returns that you would expect from true growth stocks. So I did want to expose myself to that. I didn't want an overwhelming percentage of my portfolio to go to those growth stocks, but I did want a percentage. I want a nice rounded, diversified portfolio. And I can link the video at the end where I went over my M1 portfolio and kind of what I'm trying to accomplish with that. But it's basically just holding a few growth stocks: Apple, Microsoft, Tesla, Google, things of that nature. And I'm only really putting $10 in it a month, or $10 a week, with $40 a month. So that $40 basically gets allocated out. Every stock gets, $5 to $10. And those are stocks that I'm not really trying to lower my cost basis, or I'm trying to pay attention too much. I know that they're in a prime growing spot right now. I'm just trying to get some money into them. That way I can kind of ride that wave up and hopefully grow that portfolio if there's more stocks that I think that are worthy of that growth. Maybe throw a Visa in there, or PayPal or Square. Something that's kind of with our times of the corona, something that's a little more digital. So I do want to be exposed into that growth realm, but I also want it to be a smaller portion of my entire portfolio as it is. And just recently, I started investing in Coinbase. I was trying to get a little exposure to the cryptocurrencies. I bought a little Bitcoin, I bought a little Ethereum. I'm trying to put into that, $5 a week, something small. I know it's not a lot, but I am kind of chunking that a little bit more. Coinbase makes you have to pay a fee to buy these things, so it's kind of hard to pay $5 for some Bitcoin, but then have a $2 fee attached to that, and you're really only buying $3. So I'm trying to do like a $40 a month kind of a thing, or a $20 a month for Bitcoin, $20 a month for Ethereum, and trying to, or $20 for Bitcoin. I haven't really even decided on that yet. I want to try to keep it under 10% of my portfolio for sure, and I want to focus on the individual stocks and ETFs as far as my main portfolio goes. But I do want some exposure into that. I mean, you can talk politics with how our money is going to go crazy inflated, and how we've printed more money in the last year than has ever been printed before, and we're completely away from the gold standard, and maybe cryptocurrency is the way of the future, and you don't want to miss that boat if it is. So I definitely want some exposure to it. I don't want to be overexposed by any means, but I do think that it's smart to kind of make your money be a little more diversified and kind of branch out. That way, one, you don't miss the boat on anything, and two, if something does go bad, not all your money, you don't have all your eggs in one basket. And the last place that I really want to diversify and I want to put some money is real estate. I would love to own a second property. I would love to, maybe not so much flip houses, but maybe, find some cheap property that I can rent out and become more of a landlord. And, properties for the most part always appreciates. It doesn't depreciate. So I would like to put some of my portfolio to real estate. Obviously, that's more of like my cash savings at some point, and that's going to be something that I have to jump at when that opportunity strikes. Luckily, I do have some cash saved, and hopefully at some point we will buy a second house that can act as some kind of investment for us going into the future. And I know there's some ways to get involved with some real estate, like with Fundrise and things of that nature, where you can put a smaller amount of money in. But I don't really want to go that route. I really like to buy a second property and to own it that way, and then hopefully kind of snowball that. You own one property, you get the rent from that, and possibly buy another one that's cheaper or better. So I kind of want to get that real estate snowball going too, and hopefully own multiple properties as a way to also diversify my investments. So we're talking about diversifying my money over several sectors here. We're talking my 401ks and my mutual funds, and then we have individual stocks, which is obviously a much smaller portion than my 401ks. So we're talking about individual stocks and ETFs. We're talking about growth stocks that I think will have a little bit higher of a return than my main portfolio, get a little exposure to that, and cryptocurrency and real estate. So I want all of these to work for me. I know it's, we're starting off small, we're just starting. I'm just like you. I'm just a normal guy, but I've got big aspirations, and, we're working on it and trying to get better and trying to get this snowball rolling downhill. We're pushing it damn hard, if I say so myself. So we're looking at diversifying over all these sectors. So we're just going to break it down for you to see kind of how everything is allocated out per week for me. So every week I'm investing $55 into my Fidelity account, which equals 78.7% of my overall stock portfolio. I'm spending $10 every single week going into my M1 growth stocks, and that's going to equal 14.2% of that money per week. And then I'm doing $5 a month just tossing it into Bitcoin into my Coinbase app, and that's just 7% of my weekly investment. And of course, you put this all out, you can extrapolate it out over a month, and it ends up being $240 with the same percentages allocated, which is pretty good for me. I think I would prefer to have something like right around like a 70-20-10 split, and I think that's a pretty good point for me to be at. 7% with the Bitcoin for me right now is perfectly fine. I might want a little bit more exposure with the growth stocks, and just trying to make sure I keep that as even as I can going forward. And I think that'll like super diversify me, make me kind of safe from any major crashes, and overall just kind of keep me protected and growing in the long term. And thanks again for joining. I hope this answered any questions people had in regards to how much my money was going outside of dividend stocks, and kind of how I'm living my life per week, and what I'm investing per week. Obviously the goal is to be able to dump in $500 a week or several grand a month. Again, that's kind of where we're aiming for. But right now that snowball, it's still fitting in the palm of my hands. I'm trying to form it before I can even push it down the road here. So we've got a good base under our feet. We're starting it out right. Again, we're less than a year in. This is a long-term goal for me. We're aiming for 20 years here. So again, If you appreciate the content, you want to see more of it, you want to follow along, hit that like and subscribe button down below, and we will see you next week. Thank you for joining.